This is your April 2021 market update. Hey guys, Chris Elliott over at Remax Action Real Estate. Hope you are doing well. Hope this finds you well. Hope you're enjoying this pollen that we are having. As we do always, we would like to come to you with our April 2021 market update. The big story, you've probably heard it on the news, you've probably seen it on Facebook and talking with friends. We have an extreme shortage of inventory in the market right now, which is causing the market to go absolutely crazy, causing all types of problems, creating all types of opportunities. It's kind of a very unique and interesting time to be on the real estate market, but interesting graphic. Year over year resale inventory, so used homes is another way to say that, homes that have been previously lived in. That inventory is down 52.5% from this time last year. So there's literally half as many resale homes on the market as we saw this time last year. As you can imagine, that is causing prices to go crazy. That is causing crazy bidding wars on all these properties, and just creating some very unique market dynamics that we're experiencing right now. So the market we're seeing, obviously the shortage of inventory is causing issues. The incentive of low interest rates is causing the demand to go through the roof. Another thing that's causing the craziness in the market right now that I thought was interesting was this graphic, that the 50-year average of new homes being built has actually been below the 50-year average for the last 13 years. So new construction really took a beating after the crash of 2008. And the capacity of builders, the amount of new homes that are being built simply has not been able to catch up to the 50-year average over the last 13 years. Thankfully, it's been steadily going up. But we're still not seeing enough new homes being built to feed that demand, which is part of the problem of why we're seeing what we're seeing today. As far as the stats, the Metro Richmond area is at 0.08 or was at 0.08 month supply of inventory for the month of March. So that essentially means that if nothing new were to hit the market, it would take us, based on March's numbers, 24 days to sell out the current inventory in the market. At the rate at which homes are being sold. So basically there is just simply not enough inventory coming to the market to match the demand that we are seeing, which is why we're seeing such crazy bidding wars and prices skyrocketing and all those things. Simple supply and demand economics at play here. A lot of folks have asked the question, hey, are we headed into another 2008? We've shot a lot of videos in the past explaining why this is much different than 2008, but one of the things that I thought was interesting was this graphic showing the month supply of inventory the 4 years prior to the 2008 crash as opposed to the last 4 years that we've seen. And as you'll see, in the run-up to 2008, we had an oversupply of properties that was able to, prices were able to continue climbing at that time due to loose lending standards and some of the loans that were being pushed out. We have much tighter regulations now, and as you can see, it's much more simple supply and demand economics at play here. The month supply of inventory has gone down consistently over the last 4 years, which is continuing to push prices up, and obviously low interest rates certainly help that. So cool thing for our homeowners that are watching this, across the nation we are seeing equity gains in home ownership. Simply by having a home, your net worth is continuing to rise as the price and the value of your homes continue to rise. We saw a $31,000 increase in equity on a kind of an average scale for the state of Virginia the last 12 months. So super cool for anybody that owns a home. Literally, you're assuming you haven't cashed out and refinanced, your equity in your home has gone up $31,000 over the last year. Very cool. Something to watch out for though, interest rates are on the rise, and everybody's predicting that we'll continue to see interest rates rise as the economy improves, as we continue to get our country vaccinated, and kind of as we get out of the lull that was created by coronavirus. Rates have been artificially kept low to keep the economy kind of juiced and running. As the economy continues to improve, we're going to see interest rates continue to tick up. So, which is once again causing some of the fervor that we're seeing in the marketplace of people wanting to go ahead and lock in a nice 30-year mortgage rate at the low numbers that they're at right now. What does this all mean for you? For my seller clients, it is go time. If you've been waiting for the real estate gods to give you a sign, if you've been waiting for the stars to align, it is now. So we're encouraging all of our clients, hey, go ahead and take advantage of the window of opportunity that's in front of you. Don't sit back and wait until something in the market changes and this white hot fervor pitch that we're seeing right now goes away. It is certainly go time. If you are somebody that is buying and selling, if you're able to, we encourage you to buy first. The reason that we encourage you to do that is we're seeing a lot of clients having tough times getting properties under contract. And if you're able to go ahead and purchase before you have to sell, that's a much better way to do it, because we're pretty sure, we absolutely know that your home's going to sell, but we want to make sure that you know where you're going before you displace yourself. Of course, if you have to sell before you buy, it is what it is. It's what you have to do. And then I'll kind of play both sides of it. Don't overplay your hand. What we are seeing with some sellers is they're taking it a little bit too far. They're kind of overplaying the situation in that they are getting these amazing offers and then they're not wanting to negotiate an inch. And I totally get it. If the winds are in your sales, if the market's on your side, you can negotiate pretty toughly. But just keep in mind what you're negotiating and what you stand to lose if that negotiation doesn't go well. We've seen a couple clients that have lost really good deals just because they didn't want to budge an inch. And I would say keep the big picture in mind when you're negotiating your contracts or repairs or whatnot. So for buyers, feel like a football coach. A casual approach is just simply not going to make this work. You really have to check yourself and really have to search down deep inside and confirm with yourself that you really want to purchase a home, that it's really a right time for you, that you really want to lock in these historically low mortgage rates, because it is not an easy time to buy a home. It simply is not. We're having clients having to offer incredible terms to sellers, quote unquote overpay for properties or bid above asking price, waive all types of contingencies. This is not a normal market. So if you're somebody that thinks you're going to approach this casually and just go see homes a week after they hit the market, or if you're not prepared to offer these type of terms to a seller, it may not be the right time for you to buy a home right now. It's just, there's no other way to say it. We just want to shoot our folks straight as far as what it's going to take to buy a home in this marketplace. Do your homework. So one thing that you can do just to kind of prepare yourself for the velocity of the market that you're going to be stepping into is looking up past sales, really figuring out what you want, what's available, what you can afford, what homes in your price point look like. You can research all this information before you start looking at homes. The reason we encourage you to do that is otherwise you're probably going to have to lose 3, 4, 5, 6, 7, 10 homes before you kind of get educated on the market. So go ahead and do your homework ahead of time. That way when you step into the arena, so to speak, you're ready to go. You're ready to pull the trigger once something hits the market, and you kind of know what you're going to have to do to get it under contract. And then last but not least, we're encouraging our clients to lower their target price. So what we mean by that is, just for example's sake, if you say, hey, I don't want to buy anything over a $350,000 house, I don't want to spend anything more than $350,000, we're encouraging our clients to maybe look at properties that are $300,000 to $325,000, or kind of cap their search at $325,000, knowing that they're going to have to offer potentially $25,000 over the asking price just to get that property under contract. If you're maxed out at $350,000 and you're looking at $350,000, you're going to be sorely disappointed, because what you're going to find people that are capped at $400,000 that are now looking at the $350,000 price point and have the ability to bump it to $400,000. So hope that makes sense. Hope you guys found that useful. If you have a question, if you have a disagreement, go ahead and throw it in the comments. Email me back, text me, send me a smoke signal, whatever it is. Appreciate you guys tuning in. We look forward to seeing you next month.